All right, welcome to the deep dive. Today we're jumping right in to cut through all the noise about that recent crypto plunge.
Yeah, the headlines were all screaming crash.
Exactly. But we're going straight to the data. We've got the November 2025 mid-cycle market correction and accumulation report.
And our mission today is pretty simple, right?
Super simple. Was that a real collapse or was it more of a structural reset?
The report's executive summary doesn't mince words.
Not at all. It calls it a swift, necessary mid-cycle correction that ended with a textbook retail flush.
And that's the key. You have to ignore the emotional headlines, the price action, and look at the on-chain health check metrics.
Because that's what tells you what the serious players were doing.
Precisely. What high-conviction actors were up to while everyone else was panicking.
Okay, but a 30% drop, I mean, that still feels brutal.
Yeah.
The report uses the MVRV Z-Score to track this. What is that actually telling us? Is it just price?
Oh, it's much deeper than that. Think of it as a valuation thermometer for the network. It compares market cap to realized cap.
So it's a measure of how overheated things are.
Exactly. And the Z-score didn't just dip, it plummeted out of that red danger zone we see at cycle tops. It was a massive and frankly a healthy valuation reset.
So if the big players, the high conviction actors, knew the structure was solid, why let it drop that far? Doesn't that look like a loss of confidence?
No, it's more like a controlled burn. You have to clear out the leverage, the weak hands. This mirrors what we saw in 2016 and again in 2020. It was the market hitting its reset button.
Okay, so let's get into the messy part of that reset, the emotional transfer of wealth. What did that actually look like on the ground?
It was absolutely textbook. On one side, you had the retail traders.
Right.
You look at the live chat sentiment from the report, and it's just pure despair. I mean, you're seeing comments like, I'm done, or specific calls for 45K, total capitulation.
Yeah, they're ringing the bell for the institutional buyers.
They are the bell.
Yeah.
They provide the liquidity. And on the other side, you have the whales just strategically accumulating.
And we have hard data on that.
We do. The report details large block orders. A $3.5 million buy wall, for example.
Wow. Okay.
And then right after that, a $4.3 million buy order placed directly at the absolute low. That's surgical. That's not a guess.
So accumulation phase complete. What's next? What are the key price levels you think we should all be watching now?
Okay, so if you're watching the charts, there are really three zones that matter now. Your new battlefield map.
Let's hear it.
First is the floor, the accumulation floor. That's confirmed in the 84,000 to 85.5 range. That line in the sand has to be defended.
Got it. The floor is in at 84K. What's the first hurdle?
That would be the immediate resistance. Call it 93.5 to 94,000. We need to get above that and, start treating it as support.
And the big one, the confirmation that we're really back on track.
That's the markup confirmation. For that, you need a sustained break and hold above that big psychological number.
Right.
$98,000 to $100,000.
So once we clear that, the market has essentially been cleaned out and is ready for the next leg up.
That's the thesis. The excess leverage is gone.
Okay, so to recap the main takeaway here.
Right.
This wasn't a crash. This was a flush, a shakeout, with institutional money confirming the bottom by buying from retail.
In a nutshell, yes.
Yeah.
The whole conversation has shifted now. It's not about defending the 84K floor anymore. It's about breaking the resistance overhead.
Right.
And that leaves you with a really interesting question to mull over. In a market that's now structurally healthy, how quickly does that sentiment flip from total despair back to, full-blown exuberance once we actually breach that $100,000 level? Because that speed, that's going to tell us everything about the velocity of the next move.